So a few days ago, Trump posted a short message to Truth Social. Time to physically audit Fort Knox, he said. On the surface, that sounds like a pretty boring story, but it isn't. If you hold gold, silver, have a 401k, or even if you just hold stocks, it might be one of the most important signals for your money in the next few months. Because there's something that most people don't realize. On the United States government's own books, gold is still valued at $42 an ounce. Now, in reality, the real market price is around $4,542 an ounce, 4.5K difference. And the government is now openly talking about fixing that mistake, or it's not a mistake, but fixing that. So in this video, I want to break down exactly what's going on, why the government all of a sudden wants to reset the price of gold, why the timing matters, and most importantly, what it can mean for your money. I mean, for our money, because I'm in the same boat as you. I hold a lot of gold. And this isn't just to protect your wealth, by the way, it's also to see where the opportunities might be. And of course, I'm going to break down what I'm doing with my gold. Am I selling or am I buying more? Spoiler alert, I sold a little bit of gold, but there's a very good reason for it, so don't hate me if you're a gold stacker. There's a good reason, I'll explain it. Okay, so to understand why this matters for you, first, we have to understand one simple idea, and that is that the US dollar has no value. And when I say no value, I mean no real value. I mean, it has value because we sort of agree it does, but it's not backed by anything. A dollar is just a piece of paper or, a digit on a screen these days. And for most of the last century, it did have value. It was backed by something. It was backed by physical gold. Up until 1971, the US dollar was tied to the value of gold, or tied to gold. So the government couldn't simply print money out of thin air because every dollar was, in theory, backed by real metal sitting in a vault. Then in 1971, like I've talked about many times in my videos, Nixon made a generational fumble and ended that backing. The dollar stopped being backed by gold, and from that point on, the government could print as much money as it wanted. And since that moment, every single president in the last 50 years has printed money and racked up a ton of debt. They just stacked debt. Actually, you know what? Clinton was the only one, funnily enough, to not do that. He had a budget surplus for most of his presidency. And honestly, this doesn't mean I like Clinton, so chill out, will you? Last time I mentioned this, people were like, I can't believe you like Bill Clinton. I mean, I'm just pointing out a fact. He literally did. Anyway, so when they cut that link to gold, they left this old frozen accounting price of $42 on the government's books. 42 an ounce. It's crazy. It was set decades ago and it's simply never been updated. So today we have a very strange situation where the market says gold is worth like 4,500 an ounce and the Treasury's books still say $42 an ounce. And that gap is a problem for us gold holders. And now, all of a sudden, after 55 years, the US is making noise about repricing gold. And counting up all the gold in Fort Knox too. That's the other thing they want to do. Now, to understand why that gap all of a sudden matters, you have to understand the problem the US government is trying to solve with this. And I mean, it's a bloody big problem. The United States has roughly $39 trillion in debt. It's almost 40 trillion. And that debt is growing by about 2.6 trillion every single year. So the government now spends over 1 trillion a year just paying interest on the debt, which is roughly 3 billion per day. They are literally having to borrow money to pay off their debt. So that's like you paying off a credit card with another credit card. It's not good. It's a very bad situation. And the debt is more than the entire military budget, by the way, which is also not good. Look up Ferguson's law after this video. Any great power that spends more on servicing its public debt than on defense ceases being a great power. So you can actually see that pattern throughout history. It's very interesting. Anyway, so America has to get control of its debt. But beyond that, why is this situation so dangerous for America? It's not just the military thing or the great power thing. Well, to understand that, we have to understand how governments actually pay for things. Governments pay for things by collecting taxes. Right? But if the government spends more than it collects through taxes, it has to cover that gap. And it does that by borrowing money, by selling debt. With things like US Treasury bonds, they issue bonds, people buy the bonds, and then they have to pay interest on those bonds. So for decades, the whole world lined up to buy US debt because US debt was seen as the safest asset on earth. But that's been changing recently. Foreign governments like China and Japan are buying less than they used to. Actually, China is kind of dumping US debt right now. And that is a real problem because if fewer people want to lend you money, you either have to offer higher interest, which makes debt even more expensive. And like I said, they're paying 1 trillion a year in interest, so 3 billion a day, or you have to find new buyers. In fact, the government is now so eager for, this is crazy, crazy, by the way. The government is so eager for new buyers right now that they recently passed a law effectively requiring stablecoin companies, a part of the crypto industry, to back their coins with US government debt. When you turn to crypto to solve your debt problems, by crypto I mean crypto, by the way, when you turn to crypto to solve your debt problems, you know you're screwed. So the government has a problem. It has a big problem. It needs money, but its usual options are too painful. It can raise taxes, which voters hate. It can cut spending, which voters also hate, or it can print more money, which causes inflation, which voters feel every time they go shopping. I mean, we've all felt this one. Every time we go to the grocery store, things cost more. I was talking about this with my friend the other day. Like, I'm in a fairly good financial position. I'm not bragging. That's not the point. But my point is, I just don't understand how normal people are living with this crazy inflation. They're not earning much per month. The average income is pretty low. I don't get how people, it's perplexing to me. And I feel bad for everyone, but it's not like I can do anything about it. It's our government's job to fix it, and they can't fix it because they just keep bloody printing money. Anyway, let's not go down that rabbit hole, I'm sorry. So let's talk about the fourth option. This is where the gold comes in. The government can create value on its own balance sheet without printing a single new dollar. How? By repricing gold it already owns. So let me give you a simple example. Imagine you bought a house decades ago for $42,000, and on your personal balance sheet, you still have it written down as $42,000. But today, that same house is actually worth like 4.5 million. That's a big increase, but whatever. If you simply update your books to reflect the real value, your net worth jumps by millions overnight. So you didn't earn anything, you didn't sell anything, you just marked up an asset to its true price. And then suddenly, on paper, you look far more richer than you were, a few days ago, far more credit worthy. That's almost exactly what the US government is preparing to do with its gold. The US holds around 261 million ounces of gold, the largest reserve in the world, if they still hold it, which is, up for contention. But anyway, at the official price of $42, that gold is recorded as being worth around about 11 billion. At the real market price, it's worth around 1.2 trillion. So if the government revalues the gold they hold to its true price, it instantly creates more than $1 trillion of value on its balance sheet without printing a single dollar, without raising taxes. And look, we all know that 1.2 trillion won't do much against 40 trillion in debt, but it's one of the many tricks that they're going to pull. And this one is also very good for cheap headlines around midterm elections, because midterm elections are coming up. I can definitely see Trump or any politician tweaking the numbers to bring debt down a little just on paper and then being like, hey, I'm the first president in modern history to actually bring down debt. But really, it's just creative accounting, obviously. And before you assume that this is far-fetched, understand that they've done this before. In 1934, President Roosevelt revalued gold overnight from $20 an ounce to $35 an ounce, and then used the paper profit to help stabilize the banking system. So this is a proven government playbook. It's not just a theory. And like I said, 1.2 trillion against 40 trillion in debt isn't going to change a whole lot, but it could help here and there. But then let's layer on the whole Fort Knox thing. So if this gap has existed for decades, why are we suddenly hearing about Fort Knox audits right now? Honestly, I see this as a media play. You announce an audit, you make a big public show of counting up all the gold, being transparent, and then once everyone is paying attention, you reveal that the gold is really worth way more, you reprice it. So the audit that Trump is pushing for isn't really the story, it's just kind of the setup for the story. And the story is repricing gold, which brings me to, is gold worth it right now? Is it worth buying gold right now? Because I think they're going to reprice it higher, but what makes me think that? I'll break it down into 3 points. First, number one, central banks are buying gold at a historic pace. Central banks are the institutions who actually create money. They're the ones who print money. And for 16 years in a row, they've been net buyers of gold. Last year alone, they bought around 850 tons, or even up to 1,000 tons by some count, roughly double what they were buying before 2022. So they've increased their pace of buying. So stop and think about what that actually means for a second. The institutions that print money, they're selling they're giving away their money to buy gold. China has been buying steadily for months now, well, for years, but a lot more over the last few months. Poland is building its total reserves towards 700 tons. So when the people who print currency are this eager to own gold instead of currency, it kind of tells you something's up, right? Number two, the rest of the world is slowly moving away from the US dollar. Back in 2001, the US dollar made up around about 72% of global reserves. Today, it has fallen below 57% for the first time since the 1990s. So countries like China, Russia, and India now settle around 2/3 of their trade with each other without using the dollar at all. So the dollar has gone from being the standard for trade to not being used by a lot of these countries. So what are they increasingly holding instead? Gold. They're holding gold. I mean, it's an obvious answer. Number three, the biggest banks are doing the same thing. They're buying up gold right now. JP Morgan, one of the largest banks in the world, is now holding more physical gold and silver than at any point in its history. This is the same bank, by the way, that paid nearly $500 million. No, sorry, not $500 million. It was actually $920 million. So it was almost a $4 billion in fines related to manipulating the metals market, the precious metals market. They are not accumulating gold because they expect it to fall. They're accumulating gold because they expect it to go up. So they are positioning ahead of exactly the kind of reset we're discussing. Which brings me to one of the most powerful lessons in all of investing. Don't only listen to what powerful institutions say. In fact, don't listen to what they say because they're full of shit. Watch what they actually do with their own money. Right now, they are buying gold. Also, it's worth knowing that this is no longer a fringe idea. Mainstream financial media analysts are now openly discussing much higher gold prices tied directly to the debt and the confidence in the dollar. So what does all of this actually mean for you? So let me start with the opportunity, and then I want to be honest about the risks, because there are risks. Here's the key concept to understand. When a government sets an official price for gold, that price tends to become the floor, or when the US government does so. So a floor is simply the level that price rarely falls below. So when Roosevelt set the price at $35 in 1934, gold didn't really trade below $35, at least not for long, for like 40 years. The official price became the bottom, and the market traded upwards from there. So if the US resets gold to say $5,000 an ounce, that $5,000 becomes the effective new floor for gold. And historically, when a floor is set like this, the price tends to move up from there over time. Now, but this is not a guarantee, by the way. I mean, markets are markets. If enough people sell, if enough people dump their gold, it's going to dip below the floor. But the floor does provide at least some form of support. But are they going to choose 5,000, or are they going to choose 3,000, or are they bloody going to choose 1,000? My best estimate is that they're at least going to look at $5,000 an ounce for their price. And the logic is simple. It has to be high enough to meaningfully repair the balance sheet, but not so high that it triggers panic about the dollar itself. $5,000 fits within that range, but maybe it could be 4,000, 4,500, something like that. At 5K per ounce, the amount of gold that the US holds is worth roughly $1.3 trillion, which is a good number for the books. And also, once the floor is in place, some analysts believe that gold is going to continue to climb considerably higher. And it isn't only gold, by the way. Historically, when gold has a major run, silver tends to move even more. Silver is often described as like the leveraged version of gold, which is why I hold a bunch of silver too. A few months ago, it took 100 ounces of silver to buy a single ounce of gold, which is historically very cheap for silver. The ratio has since narrowed to around 60. In strong precious metal runs, it can fall towards about 40, which means silver may still have room to outperform gold from here. Now, look, I'm going to be honest with you though, because I need to explain the risks here. None of this is guaranteed, and it's not without risk. A revaluation could also come with tighter government controls over gold. In fact, the last time the US revalued its gold in the 1930s, which I talked about, the government first made it illegal for ordinary citizens to own gold. I mean, they did. Look into it. It's crazy. They bought it from the public at the old low price. Then as soon as they got it all, they revalued it to $35. So when gold suddenly becomes valuable to the government, history shows that it can become less friendly towards private ownership. And that's putting it nicely. And the other thing is, back then, most people held physical gold. These days, most people hold gold in an ETF of some sort. Some of it is backed by real gold, some of it isn't. If it's backed by real gold, it's held in a safe somewhere that you don't have access over, but the government certainly will have access over it. So they kind of already own your gold, technically speaking, unless you stack your own gold, which I'm sure most of you do, because that's the best way to have gold, to actually hold physical bloody gold. Anyway, I'm not saying that that's going to happen this time, but I'm not just going to tell you all the good parts, how gold could go up from here, and not mention some of the risks. So how should you actually think about all this? The financially savvy among us don't try to time events perfectly. We're not trying to time gold pumping. They position early and they just let it play out. So that's pretty much what I've done. And the advantage goes to the people who understand what is happening before it becomes a headline. So here are a few principles worth holding on to with gold. First, if you choose to own gold, history suggests that the physical metal matters, something you actually hold rather than having a paper version of gold. So you want to hold physical metal. Second, these are long-term positions. It's not a get-rich-quick scheme. It's not a bloody trade, and you shouldn't use leverage. The people who have historically won with gold are the patient ones, the people who just hold it and wait. And third, never put yourself in a position where you could be forced to sell at the worst moment possible. And one more thing, by the way, I'm not a big fan of jumping into something after it's already pumped a lot, and gold has pumped a lot, so do consider that if you're looking at a gold chart. Consider how much it's pumped and see if it makes sense for you personally to get in right now, because it might be that it's pumped too much. This video is mostly for people who already own gold. Now, if you don't hold any, there are better opportunities out there, and this is why I've sold a little bit of gold. I sold a little bit of gold because it moved really high. I've taken a bit of profit and I've spread that into other things. What are those other things? Something that hasn't pumped as much is copper. I think copper has a good future, and even though it's at an all-time high right now, it hasn't had nearly the pump that gold has had. So I see copper as having a pretty decent future. Anyway, guys, that's it from me today. I hope you found this video useful. Sign up for my Substack, by the way. It's a free newsletter. Sign up below. There's a link below. Check it out, and I'll see you next time.